We've just got a quick question here from a new subscriber, Tembing Corsi, asking once I've established what the strongest and the weakest currency is in any particular session, can you just go ahead and pair that trade, pair those two currencies together and trade them immediately, or are there other things that you can consider or should consider? So thanks for the great question. There's definitely a couple of other things that I would advise you to consider. Looking at the strongest and the weakest ones in any given session, that's really I'd say that's really your first step, but it's also the simplest one, right? For that, you can just use something like a currency strength meter. So we've built something that we call the intermarket monitor in Icon, a separate platform. And what you can see here is it gives you a rundown of the strongest and the weakest currencies at any given moment. So that's really the first step. So if I take a look at this screen right now, I can immediately say that, okay, right now the Kiwi dollar is the weakest currency among the majors, while the Swiss franc is the strongest one among the majors. So that's always going to be your first step, right? I've got a strongest, and I've got a weakest one. After you've done that, though, the most important question after that is to find out what the reasons are, what the underlying reason is, if any, for that particular strength and for that particular weakness in the market. So what you don't want to be pairing and trading is a strength and a weakness that doesn't really have any specific catalyst or any specific driver for at that time. So looking at the Kiwi dollar right now, looking at the Swiss franc right now, we've got a very mixed tone in the markets. We've got equities moving up and down, commodities moving up and down. It's a very mixed tone. It's been that way for the majority of the week. So even though we're seeing Kiwi down, Swiss franc up, there's no real specific short-term catalysts and drivers that we can point to for the Kiwi and point to for the Swiss franc to say that, okay, this is why the market right now is selling the Kiwi dollar and buying the Swiss franc. And if you have no specific reasons for why the market's trading that way, then that's normally the currencies that you just want to stay on the sidelines with, because it's not worth risking your capital for something that doesn't really have an underlying reason, a driver for. If it's something that's moving in line with the overall fundamental outlook, that's obviously different. If we see the Kiwi dollar pushing to the upside and the Swiss franc pushing lower, even if there's no fundamental drivers behind it from a specific catalyst sentiment point of view, it's in line with the fundamental outlook for that currency. So that shouldn't be too surprising. And that's something that if it's trading at an attractive level, something that you can look to re-engage in. From a medium-term perspective, that is. So always make sure that you understand what the reasons are for that. So a good example here today is pound. Pound's really the only currency that has a specific reason to be catching a little bit of an offer, because we had those recent negative comments coming out from the EU about the Northern Ireland issues they have right now with the UK, some punchy rhetoric coming out. So that's really the only currency moving in line with a specific catalyst right now. So that's always going to be your first step. What's the strongest, weakest, but is there a reason for that strength and reason for that weakness? Now, the next step after you've established a specific reason is to ask yourself whether that sentiment you're seeing right now, whether that's in line with the fundamental outlook, the fundamental underlying bias for that particular currency. So let's stick with the pound for a second. We know that, okay, the pound is one of the laggards. It's just behind the Kiwi dollar, but there's actually a reason for the pound to be weak right now, and that's that negative rhetoric we've had coming out from the EU. So let's take a look then at something like pound dollar, right? We know that there's a reason for the markets to be selling pounds right now, because it's those negative comments we've had. We had some rumors and some threats that there might be some trade disputes, some tariffs, maybe some sanctions, etc. Whatever the outcome might be, there's some concerns about that. And we've also had some recent comments coming out from PM Johnson as well, saying that, hey, cases aren't looking great right now. It's something we need to consider in line with that planned reopening. So there's negative sentiment, and there's a reason for the markets to be selling it. So we know what the reason is. Now the question is it against the fundamental outlook? And currently it is against that fundamental outlook for sterling, because if we go to the terminal, if you go to the currency research section, you can see that it's one of the stronger currencies right now from a bullish outlook point of view, from a fundamental outlook point of view. If you go to the fundamental driver report itself, you'll see that we have that strong bullish outlook. So it's a sentiment against that underlying bias. Now, it's very important for us to know this, because if it's in line with the fundamental outlook, so let's say there's a positive sentiment on the pound, when it's in line with the fundamental outlook, then that makes that short-term trade all the more interesting and a lot more attractive, because it's something that we think might have a little bit more legs. If it's sentiment in line with the underlying fundamentals, that's always going to be a much more attractive trade, because you can look for slightly bigger targets with that. That's a trade that you might hold on to a little bit longer. Where if it's something like this right now, because it's against the grain, against that fundamental outlook, it's very tricky to gauge where you should take profit if you start to sell the pound, for example, against the dollar. It's very tricky to know where to get out of that trade, because at any given moment, you might have that medium term buyer stepping back because they find value at lower levels buying back the pound versus the US dollar. So, the one caveat to this, though, is that whether the sentiment that's driving the markets at that time, whether it might be important or massive enough to actually potentially change the medium term outlook for the pair. For example, let's say that let's say it's a risk off turn, right? We see that the Aussie versus the US dollar is moving lower. It's moving lower sharply, and it's due to a risk off turn in the markets. And that risk off turn is because let's say the markets is fearing additional lockdown restrictions across the globe, because there's a new variant, and that new variant, COVID variant, is the existing vaccines we have has been proven to be ineffective against a massive, strong super variant, for example. That's going to be so massive, and that's going to create a huge risk off turn that might actually change the fundamental outlook for something like the Aussie versus the US dollar. So it's pushing lower, but it's something we think has more legs, because it might be bigger enough to actually change that fundamental outlook. Or let's say we have the Federal Reserve, of course, coming up next week, and let's say at next week meeting they come out surprising the markets by saying that they're phasing out QE in Q4 this year, and they're projecting a first rate hike by Q3 next year. That's so absolutely bullish the dollar. That's so unexpected. That's something that can just in an instant actually change the fundamental outlook for the Aussie versus the US dollar. So that type of risk off turn is something that you would just jump in on and trade. That's not something that you need to second guess. It's a no-brainer trade, because it's so big, it's so important. It's actually shifting the bigger outlook. Now, when you compare that to what's happening with the pound right now, even though these comments we've heard about from PM Johnson and about from the EU, even though they're important and it is creating downside in the pound, it's not something that right now we would expect to change the bigger picture, the fundamental outlook for the currency. And that makes it tricky to trade short term, because even though there's clear downside potential, how far can it really go? So in an environment like this, even though there could be potential right back down to that next key support area, we are expecting medium-term buyers to step back in from value area. So then you need to ask yourself, okay, is there a reason for the markets to be selling pound right now? Yes, there is. Is that something that you would have appetite to sell? Arguably, in my opinion, something like this wouldn't be worth selling, because it's against a very strong, well-established fundamental bias. I would rather wait for that short-term sentiment to push the market lower into an area where I would like to consider buying back into that fundamental upside bias, if that makes sense. So nothing wrong in shorting the pound if there's a clear reason for the markets to be doing that. Just make sure that if you're doing that against the fundamental outlook, the fundamental bias, you need to look to take profit a lot sooner, reduce risk a lot sooner, because the markets will have a reason at lower levels to buy back in line with that overall bias. So having said that, there might be times when it's fine to trade without having strong enough sentiment to do so. And that is, like we said, when let's say you get to your screen, right, and you see that the pound is the weakest currency and the dollar is the strongest one, and there's absolutely no reason for the markets to be trading that way. And you've seen that based on that sentiment, the markets have drifted lower into a key area where you like to buy back. if there's no reason for the markets to be trading against that fundamental outlook, that fundamental bias, then any type of moves into key levels on the back of no sentiment can be attractive opportunities to maybe basically just buy the things or sell the things that you like at better levels. So just because there's no sentiment uh, doesn't mean that they can't be. It can't never mean there's a trade. If it's sentiment for no reason that pushes the markets into levels that you like, then by all means you can buy back from a fundamental outlook point of view. So I wanted to just make that distinction that it doesn't mean that just because there's no reason you can't trade it. So let's go back to the grid. We know Kiwi the weakest, Swiss franc the strongest. Let's say this was actually in line with the fundamental bias for these two. Obviously, it wouldn't be a problem to basically just trade in line with that. But because we know the fundamental outlook for the Kiwi is actually strong and the fundamental outlook for the Swiss franc is actually weak, we know that these moves without reasons might be setting up for a potential buying opportunity in something like Kiwi Swiss franc. So we might use this sentiment right now to basically just buy back from better levels. Now, of course, there's other things to consider as well, like proximity risk. Tomorrow we are going into US CPI. It's expected to be a very, very important event. And the markets have been trading jittery all week round. And even though we're seeing Kiwi Swiss franc pushing against the overall trend, even though this might provide an opportunity to basically buy back at better levels, in a session like today, in a week like today, with CPI coming up tomorrow, there's nothing wrong with just being a little bit more patient. Even though there's no clear reason for the markets to be trading this to the downside right now, and even though the medium term bias is tilted higher, there's reason for us to be patient. And that's that very choppy price action we've seen this week. Risk sentiment is very unclear, and we've got major events scheduled for the next day. So in that sense, even though we are at attractive levels, patience is required because we are going into some key events, and that can see this market pushing even lower if CPI obviously instigates some risk of trades tomorrow. So hope that gives you just a little bit more insights into some of the things you can consider. Unfortunately, it's not as simple as this is the strongest, this is the weakest. Trade that in line with that. There is more considerations that we need to go through in order to find those really high probability trading opportunities.